Ryan, you want to talk a little bit about, or at least lead us off about stock splits? Let's jump onto that.
So for stock splits, I think one of the main reasons why Apple and Tesla are trying to split their stocks is because they want to become more attractive to maybe people that are scared of investing in something that's that expensive. So if you split your stock 5 times, you're going to attract someone that has maybe $10,000 worth of investable money as opposed to someone who has like 100,000. They're not scared of a $1,500 per share. So I think when the stock split, in theory, you're just if you have 10 shares, now you have 50,
Right.
and so
For Tesla, yeah.
you got to hope that it runs back up to 1,500, and then you're making tons of money. So I think why the companies do it, I think it's just to attract more investments to further their R&D, and I think that's what Tesla's trying to do.
Well,
And
that and not just for the common investor, I think it's also for their employees too. It opens up for more availability to their employees to buy into their shares.
Yep.
In the right pay. That's my understanding of it.
Yeah, I think that's a good point. I hadn't thought about that one as much, so that I think that's a really good point. It's a great way to reward your employees and also re-incentivize them to continue where the track they've been going. Obviously, because it's been successful to date, you want them to keep going in that same direction. Now that they have even more stock, and they're more incentivized to increase that as much as they can. With good performance. And then, Ryan, so I think it's an interesting point of you're talking about somebody who might be, I think there's a difference between those who are wary of the valuation of all these companies at the moment, because right now, big tech and when I say big tech, I'm meaning, Facebook, Apple, Amazon, Microsoft, I missed one, Google, and they're all trading 30 plus next year's price to earnings. It's multiple. It's kind of insane, but they are money printing machines. But when you get people that are more cautious of valuations and not, let's say, an individual investor that is just throwing money in them because they're a popular stock, you have to find some way to kind of bring them back in the fold. And I think that those types of investors, which I'm one of, is more likely to invest in $100 of Apple stock and get a few shares of that rather than throw however much into 460 or whatever it is right now. And it opens it up to the poorer investors, and I'm not meaning poor in a derogatory sense, usually skews younger, like our cohort of people that just got started investing, only have their stimulus check or however much they have in their savings, and they want to start putting that money to work in the market. Well, what are you going to buy? 1 share of Amazon, or are you going to go try to buy 5 shares of Tesla?
Right.
Or 3 shares of Tesla, I guess would be a better example, because that's been broken up. I do know fractional shares are a thing, but I do believe the psychology, especially in younger male investors, of nobody wants to say they own 6 fractional shares of Apple. They want to say I own 60 shares of Apple.
It's definitely like a lot of psychological thing. I mean, it doesn't change the valuation of the company, I don't think, at all, except for when it gets more of a pump into the system of shares.
Yeah, not on book value. It's
right,
if
exactly.
10 pins, or do you have $100 bill? Do you have a Benjamin? So
the only thing that I'm worried of is so with Apple and the Dow, I think it's going to impact like their upward movement. So it's been one of the Dow's best performing stocks, obviously.
Mhm.
And I don't see it continuing to grow at the rate it is when the split happens. It's something that's good for institutional investors because they get more shares, but I think as far as percentage growth, it's going to be trimmed a little bit just in the short term, but long term it's going to even out and be fine.
See, I think it can be a net benefit though, because having your most popular index, which I would argue the Dow is, whether it's not necessarily the one you want to be looking at of all the indices on, overall stock market activity and what we'll say for brevity is health. You don't want Apple controlling such a massive stake in it, because when it's going up, it's great. When it's going down, it's terrible. So it's just I think there are benefits to it not having as much influence on the Dow, and it can tie more back to the performance of the other 29 companies in the Dow, rather than just what has Apple done today. And that determines whether or not my portfolio had a good day.
Right.
That's true. That's a good point.
So when these stocks split, I feel like I've seen an initial rise in their percent change. Is that what y'all are seeing too? I mean, at least with Tesla's immediate one, and then what was the most recent one? The very most
Apple.
recent. Apple. I guess Apple was the most recent, and they significantly jumped right away. Is that only because there's just such a heavy pump or expectation of a heavy pump in with younger investors?
Yeah.
Or is there other stuff to it?
I think it's an unanswerable question. There's probably 1,500 factors at play.
Right.
I think a big one is the fact that so many people I think you have institutional players running it. And by running it, I mean buying more and more every day, making it go higher and dragging the retail investors to also pay more. You also have short sellers trying to cover their positions and trim their losses. And it's going to probably run until it splits. And after it splits, it may continue to run because you'll have this flurry of buying of new shares that are all available in the market once people sell. And we'll just have to see what happens. I'm having zero experience with stock splits.
Right. So I'm bringing it up. I know in our little text, you mentioned that 99 there were 25 splits
I heard
because of the .com burst.
Yeah, I heard that on CNBC today. In 1999, which was a great year for tech stocks, wink wink, was there were 25 stock splits because from what I gathered, that so many of the companies were, I was 5 when this happened, so obviously I wasn't following stock markets then, but
I hope not.
hey, it could have been a little Warren. You never know. But
Ryan might have been.
it was just a way to keep it going up. It was a way by lowering the share price, even though you're not changing the face value of the company or the market cap on face value at least, or book value for that matter, you're going to have it be more accessible to buying, and it keeps going up. And as Davey Day Trader says, stock can only go up, and that's all they've been doing right now. So,
yeah, I wouldn't be surprised to see like Shopify or any of these others that have run up to like 1,000 a share. I mean,
Yeah,
it would just attract more investors, and that's a Davey Day Trader favorite, Shopify.
Hell, Canadians, dude, up in the Shopify, but you got to Amazon. The 3,000 to 3,200 a share right now. There, and showing no sign of slowing down, because why should it until any sort of antitrust regulation is levied against it? And if anything, the pandemic has strengthened Amazon's position in the market.
Yeah, I remember when that was like,
absolutely.
It was like 800 a share. We were like, oh, we should get in. But we thought it was too expensive, and now it's like 3,800 or something.
Well, I don't remember this conversation because I might have gotten it at 800.
Oh, fuck you.
And then we all know Shopify. When we were in Utah, and it was like 180 a share, and now it's at 1,000. I mean, literally, we're all idiots for not just holding on to that one.
Well, we also didn't foresee, the world shutting down and e-commerce being accelerated by 5 to 10 years. But yeah,
it just sucks. But I'll never forget that one.
I mean, that's the name of the market, man. It's like what could have been.
Well, that's why I
play all the time.
A lot less trading, having owned Amazon, Tesla, and Shopify, all at a lot lower numbers than they are right now, and more to investing and trying to reap advantages of companies that do inherently move higher. And it's worked out well in the short term so far, obviously, because everyone's made, except short sellers, have made money in the short term, unless you've owned like a cruise line, or an airline. So that's kind of why I had the change of strategy for that. But stock splits is depressing me. Let's move on.